Good morning and welcome to Fast Market. It's Wednesday, January 30th. I'm Tom White, joined on set by co-host of Fast Market, Kevin Hinks, and also by Scott Bauer, the CEO of Prosper Trading Academy. Welcome to the show, Scott. Thanks for making it in on this chilly Chicago morning.
What do you mean? It's only going to be 60 degrees warmer by Sunday.
Yeah, that's right. Everything's going to melt. You think the city's ugly now? Wait until till Sunday.
The bad weather keeps out the jerks. That's the way Chicago people look at Chicago weather.
There you go.
This is a no-tear zone. I'll get you a box of Kleenex if you're crying about this cold.
And on the positive side, traffic was very light coming in today.
Nothing coming in. It was perfect.
Not a lot of people coming into the office today, but we're here, and we've got the markets up. You know what? This is a Fed day, Scott, but nobody's talking about the Fed because no expectations there. This is all about earnings today, isn't it?
No question about it. And it was an Apple relief rally. And we were just talking about it offset. The numbers obviously weren't that great. Analysts are actually pretty bearish on the numbers and the expectations moving forward. But I think the bottom line is it wasn't as bad as Apple maybe had set it up to be when they lowered that guidance a month ago.
And what did we learn from this, guys? Uncertainty versus certainty, right? Even though the numbers were lower and not great, uncertainty turned into certainty in the market like that. When in doubt, put a number on it. Traders like a number that they can deal with.
Yeah, I think there was fear in the market that these numbers out of Apple were going to be worse, and they weren't. They weren't great, like Scott said, but they weren't worse than a lot of people expected.
No, they got $320 billion in cash. I think was that the number that
Yeah, something like that.
So they've got some play here. I mean, yeah, they haven't raised their dividend recently. They haven't announced a new set of stock buybacks, which might be coming down the pipeline. But I think this was, everybody exalting that air and going, hey, maybe it's not as bad as we thought, or maybe this is the bottom as far as on a quarterly basis, Scott.
Yeah, and what's crazy to think of also is their quarterly revenue is what Boeing is for the annual number. It's nuts, and yeah, to me it's a relief rally, and I'd be a little cautious, quite frankly.
Yeah, I'm with you on that point, and a lot of analysts coming out this morning saying, hey, you know what, we might get a bump up here in the shares, which we are seeing Apple up pretty significantly over 5%, Kevin. But you know what, take this with a grain of salt because you know what? Services and some of their wearables might be expanding as far as revenue growth goes, but a 15% pullback year over year in iPhone sales, that's not positive when over 50% of the revenue is generated from those iPhones.
I just see a company that is transitioning to a new way of making money. And you know what? Here's what I see. When I look at Apple from a trading perspective, I'm not worried about Apple going to $200 or $220.
Right.
I'm looking for the next 2 or 3 hours what it's going to do, and that's what I want to trade.
Right.
And I want, and just like we see hundreds and hundreds of times when there's a black cloud over a stock like it's been in Apple, they oversell it, right? When everything's positive, they overbuy it.
Right.
That's what you're seeing here. You're seeing a correction just because it was so oversold and overdone that you're seeing relief rallies. And guess what? You can make money trading those two.
Yeah, but it was oversold for a reason because Tim Cook came out on January 2nd and said, hey, our revenue is going to be a lot lower than expected. We're not selling as much over in China.
There's a few other stocks that have pretty much followed that same exact pattern over the last few days. Whirlpool is one of them. Yeah. Triple M was one of them. Yep. And even McDonald's this morning, pre-market, when that news first came out, their earnings first hit, McDonald's was down $3-4 bucks.
It was.
Now it's approaching its all-time high again.
Right. Yeah. That's true. Oversold, overbought, sentiment in a lot of these stocks causes a lot of these, volatile moves in the name. But Kevin, let's take a look at Apple and what you guys did there as far as example trades yesterday to kind of give everybody an idea of what you did. I believe you guys, I wasn't on the show yesterday, busy doing some other stuff, but you guys.
4 trades.
You initiated 4 example trades.
4 trades.
But they were all basically neutral to type of bullish stances as far as that goes. And by pairing these different strategies, you created a little less downside risk too in case the shares did fall. So why don't you walk us through what we did here? I've got them listed if you need me to go through them.
So we did 4 trades. Joe Tegay did a great job yesterday. He did the 160, 162.5, 165 butterfly. Just a 2x4x2. That's what he did. Stock's going pretty close to 162.5. He's got to be feeling good about that trade.
So he bought the 160s, sold 2 of the 160s 162.5s and bought one of 165s,
Right.
creating a
2 by 4 by 2 total.
A bullish strategy up near that apex at 162.5. Okay.
Right. Only paid 24 cents for
Okay.
that. So that trade right there is going to do well. How about the 162.5? We did 5 times the 162.5 calendar spread.
Right.
That's going to do just a 1 weeker. Feb 8th, Feb 1st calendar spread.
Right.
That one's probably doing well.
Yep.
How about this one? Then Sean Cruz came up with the short the 165s, long next week 167s. So he did kind of a diagonal that he did for a 13-cent credit.
Right.
So that one is probably looking all right. And then the last one we did for the explosive upside was the short 155, long 2 of the 160 calls.
Yeah, and we've got different quantities in here based on some of the strikes are overlapping. But Kevin, let's take a look at the Analyze tab and show our viewers what those trades equated to.
That's not the
there
right
might
one.
be
We
there
need to
might be
show
some
all.
other stuff in there. You want to show all, but I think there might be some additional things
Hold
in
on.
there. Yeah,
Let's
there you go. Yeah, so this is basically.
Sounded like you guys may have gone 4 for 4 yesterday.
You know, the only one that's a little bit in question, and actually it's past that, is the 155, 160.
1 by 2.
The 1 by 2, the back
Yeah,
spread.
you sold one of the 155s, bought
Right.
2 of the 160s.
And we only paid 14 cents for that.
Right.
So that's what gives us, if you see the top right side of that screen, the unlimited upside, because we're long 1 unit.
Right.
And that was the one that gave us a chance for explosive profits if it turned, significantly that way.
There it is. Right there is the risk profile of all those positions that we had on.
And you can see where we are right now. We're pretty much in this level here. But remember, because we've got 2.5 days, we haven't maximized yet.
Right. Now, do you want to adjust any of these positions as far as trade management goes? Do you want to take off some of that upside risk in case it does start falling? Scott, what do you usually tell your clients on something like this? When you got multiple positions, sometimes it can get a little hairy trying to figure them out.
It can, and again, I go back to what was the reason for putting this position on in the first place?
Yeah.
Was it a trade based on earnings, or was it a little bit more of an investment where you're looking for just a little bit longer term? Longer term meaning maybe just 2 or 3 days.
Yeah.
If it was a trade and you've hit, let's call it, you've hit the jackpot on 3 of the 4, and the 4th one looks to be pretty good here.
Yeah.
I'm taking some of this risk off. I'm probably taking half of this off. Now the butterfly, where you're short that 162.5, Kevin, like you said, you still got a couple days left here to collect more premium, but you're sitting in a great spot.
Right.
And what we can do is, and this is a good lesson, is on the actual page with this, you can look at cash and sweep vehicle. So you can go through the actual trades that you did on the trading platform. So you can see right here in Apple where you can kind of go through exactly what you did on each trade. So you bought 2 of the butterflies for a 24-cent debit. Right below that, you bought 5 of the calendars. So if you have any problems with overlapping strikes, you can get a good base there. Now, Kevin, did you want to close that butterfly, the 2 lot? Like Scott said, where take your gains on that particular trade that you paid 24 cents for 2 times, and just get out of it.
Yeah, the question is, and the risk is on something like this is it going to go further? Right? Because as you're going towards the peak of that butterfly, and what we talked about on the air yesterday, especially with the butterfly, is butterfly has got a little timing factor to it, right? We're a little early to get to this short strike. We'd much rather have this trade going like this on Friday today, because we're in that good zone where we're profitable, but we're not as profitable as we want to be. But as you can see,
it's only doubled in value, a little bit more than double, Scott.
Yeah, and what Kevin just said is that one of the key components of a butterfly spread is, even if you're right, it does all come down to timing, because butterflies really don't start appreciating at that short strike in the middle there until you get really a day or so outside of expiration. And then they start exploding. So you can see right now this thing's trading 55 cents. If we could fast forward in time to end of day Friday, you're maxing out at about $2.50 here.
At $2.50 where this spread maxes out, it's naive to think you're ever going to get to $2.50, because that's the price on expiration day at 3 o'clock. So if you get a double like this is already, or you know, by the end of the day, yeah, I think you take this off and you're very cognizant of it blowing through that short strike and towards your other long strike. So that's when obviously you get to the other side of the profit graph.
And just to expand on this a little bit, if you go to the trade tab here and just look at what the expected move in Apple is between now and Friday. There's still
$4.
But so if you look at that and you believe in that expected move, what that's telling you is the likelihood is Apple's going down to 158.5 or up to 166.5 by the end of day Friday, and not staying.
The one-day
right
move is
where
240.
Right. Exactly.
So I mean, you have. Unfortunately, this is one of those where great trade worked out perfectly, but you may not get to maximize.
Right.
You may have to take your one-time round tripper and get out.
And what I typically like to look at on those is like maybe put a 75-cent offer in on those, or at least one of them, you know, and work some orders, because we should, if the stock remains here, we should see that thing expand a little bit.
We won't even do that. We'll go to 65 cents and we'll say sayonara and go. That's almost. I mean, we put this on for 24 cents. That's almost a triple.
Yeah, right. Exactly.
There is commissions in that because it is a butterfly with multiple legs. So so we'll do that. The calendar we're going to probably leave open, and also the diagonal, the one by that we did.
Yeah, because that's short the 165 strike. We got a little time on that.
We got a little bit of time. Now let's move over to another one, Boeing.
Yes.
Boeing also had earnings. You guys did an example trade in there. Now this report was pretty good. 548 versus 458 on revenue of $28.3 billion.
Blowout.
I mean, it was a blowout number. Record free cash flow for this company post results. Commercial plane deliveries, 895 to 905 for fiscal year 19, which is a jump of nearly 10% over last year, guys. So this was, for all, you know, what's said and done on it, it was a blowout report on this. And Kevin and Boeing, you bought an unbalanced put butterfly for a credit of 156 and bought the 350 strike put calendar just 1 week wide for $1.88 debit.
Right.
So a net, you're net looking at about a 32-cent debit.
Yeah, unfortunately, the downside put calendar is going to take some of our profits away from the unbalanced butterfly.
Yep. But that being said, Kevin, even though Boeing's trading about $388, right? So you could actually expand your strikes that are available on here, and look what, if you wanted to just close the put calendar and you know, basically, you know, give yourself a little bit of chance, you still can collect about 40 cents for that put calendar.
And I would, and
it's
definitely
now $38 out of the money.
And you don't hear me say this too often because I believe in letting these things play out over time, but you got to blow this out.
Yep.
Boeing is not going back down to $350.
Oh, that was before
in
Friday.
In my opinion, right,
Friday.
exactly. I feel that if you are bullish on this position, that it's not going back down there.
Okay, so I think we're going to look at how many we actually did on that, Kevin.
3.
We did a 3 lot. Okay, so Kevin's going to go ahead and close that out, the 350 put calendar that we did 3 times. Yeah, and that also shows you right there on the trade page that there's overlapping strikes on that that particular unbalanced butterfly. So Kevin's going to go ahead and work on that. But that's a good way to lock in that extra 42 cents, and your put butterfly, unbalanced put butterfly on the downside, you get to keep that. So maybe it's a slight winner at this point, but if Boeing does start falling a little bit, maybe you get that put unbalanced butterfly to expand a little bit. So Kevin's going to go ahead and take care of that. Yeah, it was a 350 and 350, and you do it 3 times.
Yep.
And Kevin will go
ahead, keep moving. I'll work.
Yeah, no worries. Now, Scott, we had another earnings report this morning. McDonald's EPS 197 versus 189. Solid, basically in line as far as revenue goes. But I think the big thing here was same-store comparable sales globally up 4.4%. They're killing it overseas right now.
They are killing it overseas, and the numbers were a little bit disappointing here at home. Overseas, they're killing it, and this was an interesting one to watch this morning, like I said earlier, because when the report first hit, it was taken very negatively. Stock was actually down $3-4 right off the get-go pre-market when this came out. Then as news started to funnel out and we got more information about that global growth, stock started to get back to unchanged, and then the market opened at 8:30 our time, and this thing just exploded.
Yeah, I think that was that knee-jerk reaction initially when it went down, when they saw that number as far as revenue goes, and then U.S. same-store sales were up only 2.3% versus globally as a whole 4.4%. So this is kind of in line, Kevin, with what Starbucks said, that overseas is not getting hurt right now as far as sales go, and McDonald's and Starbucks, they've got the scale, right?
Scale. Only McDonald's and Starbucks are the two that I feel have that word scale so incredibly well. So if they get products right and if they get their business model right, look out. They can really perform in terms of the bottom line. Yeah,
and they also, if you look at the trading platform, the dividend was raised 15%, which the Thinkorswim trading platform is already reflecting a quarterly dividend now of $1.16. That's 2.5% yield on McDonald's. It's pretty solid.
It's not bad.
Yeah, so this stock is up nearly $5. We did do an example trade in there yesterday, Kevin. You guys sold a call spread 9 days from expiration, so the February 8th weekly series, the 190, 192.5. You only collected 46 cents on that on that vertical.
That was all we could do to get some type of, and the reason that we justified that was this right here. If you look at the McDonald's chart, 190 is their all-time high. We use that as our short strike as a little protection against them missing.
And just at the beginning of the week or Friday, this thing failed at 190 again, so maybe a double top. Scott, now you guys with Prosper Trading Academy did an example trade also in there.
We did. We actually traded a call calendar. Yeah. We did the 190 call calendar. Sold this week, bought next week, February 8th. We bought that for about 26 cents.
Okay.
And again, that 190 strike was the magic strike.
Right.
And so I was looking at that as a potential point of resistance, and that if we approach that this week, the perfect spot for that. We got out of it this morning. We bought it yesterday for 26 cents. We sold between 50 and 55 cents this morning. Again, we could have let this go further, but I look at this as this was a trade. It was not an investment. We move on, Kevin, like you used to say, or like you always say, churn that inventory, get on to the next trade.
We're in the moving business, Tom.
Right. Moving business, right. Okay, so Kevin, on our example trade, we've got 9 days to expiration.
Yes.
Are you comfortable with leaving that open? We sold it at 46. I'm not sure what it's trading at right now. Why don't you go ahead
it's
and...
not much higher than that right now.
No, it hasn't lost
because
a significant
implied
amount of money.
volatilities,
it's trading about 51 or 52 cents, something like that.
So it's about a scratch right now, but we've got time. And the key thing here, Kevin, is we've got over $3 up to our upside break even of 190.46. So good example position there and how to manage some of these positions. But let's move on because we've got other stuff going on, guys. We got earnings after the close today.
We do?
A couple big, just a couple big names, Scott. Nothing big here. We'll start off with Facebook. Let's take a look at Facebook, Kev. Let me give you some color behind this. Shares are down about 33% from all-time highs that we saw in July.
218. Down to as low as 123. Now trading about 147.
Up 2%, probably on the back of results out of Apple.
Sure.
As with the overall market. EU just came out over the last 2 days, said Google, Facebook, Twitter must do more against fake news. I think Facebook's taking the lead here, guys, as far as the amount of capital they're expending to combat or to ramp up their oversight as far as fake news, maybe fake sites, things of that nature. When you look at Facebook down that much, Scott, and there's metrics that are saying that that businesses aren't pulling their ads from this platform yet. So that should tell you that, hey, maybe this revenue should come in line or higher.
And I actually am looking at the contrarian view on this one, and I think we're going to see a report very, very similar to what we saw out of Apple. People are expecting bad things coming out here.
Right.
And I think we're going to see a not so bad report. Maybe not the rosiest report in the world, but a not so bad report, which to me, there's some pretty cheap upside plays here. Call calendars, butterflies. I'm really looking at that. I think the expected market maker move or the move to the end of the week is about $10 or so, I think.
940.
Okay, so I'm looking around that 155 to 157.5 area to do some call calendars.
Yeah, it's how about this? The move for the whole week, Scott, is 990. The move for one day is 940.
Well, that tells you we're only 2 days from
Exactly.
expiration, right? And we'll get that vol crush after earnings. Kevin, what are you thinking here as far as Facebook goes? And whether, I think the key metrics that are going to come out of this report, and I know they talked about it earlier, is the monetization of WhatsApp, the monetization of Instagram, the monetization of stories. I think that's going to be, the key as far as a conference call goes.
What I love most about Facebook, and they get a bad rap sometimes because the demographic on Facebook is going up and the younger kids are going to Instagram. Newsflash, they own Instagram too. So,
yeah, but their ad revenue is not as high on Instagram.
On Instagram as it is on
and when do they start monetizing Instagram? Or when do they start mentioning, how much money Instagram makes? They really don't.
Yeah, and the popularity of the Instagram stories is starting to explode a little bit. So I know that we'll probably get some more clarity on that conference call. I think that's going to be key. But I'm along with Scott. Expectations for this company are a little bit low. So what are we looking at for an example type of strategy that we can,
I'm exactly in line with what Scott's doing here and what he's thinking. And look at the 157 call. What is this telling you about the upside? And here's what you see. I'm gonna throw up something here, and look at, let's see, implied vol. Look at the implied vol of the 157s. It's actually, you know what? The vol is holding pretty solid here in terms of, we've seen Facebook many times invert the call skew
Look like a
would go up.
commodity,
It's really
almost,
not right now. This is the first time. So what is that telling you? There's information in that number. But
Yeah,
look at
one of the reasons
the
is
157 still trading $1.30
because of the fact that I think you're getting speculators coming in here,
Sure.
so that's probably skewing.
Especially with what you just saw out of Apple.
Right, exactly. Because expectations were so low,
Right.
Maybe the shorts get squeezed on any good news out of this particular company. But go ahead and show our viewers here, Kevin, what you're looking at.
If we do a 157, and you know what? Let's challenge ourselves to do more than one trade.
And
There's
this is
50
strategy.
cents.
Yes, this is
for the 1
Scott.
week. I mean, look at that. 50 cents for this 1 week. Basically, the 157. That is relatively low for where that spread can go.
It is, and I'm going to throw out one more.
Yeah.
Still doing a calendar, but actually selling the 160 of this week, which is still really juicy, but buying the 157.5 next week. So I'm looking to take advantage.
You're doing a long delta diagonal.
A long delta diagonal.
Okay.
Yep. Take advantage of the really rich 160 call this week, but also take advantage of extra delta to the upside on that move.
Right. Okay. So Kevin's going
I like it. We're going to build. We already sent the 157.5. Now let's look at the one. Now that was a pure calendar spread, a fundamental calendar spread. Now let's go to the diagonal. And we're going to do, instead of the 157s, we're going to embed a long call vertical into this. And same long option, the 157s 8 days out.
Should be about a buckish or so.
Right, 98
There you
cents.
go.
Well done over there.
Yep. And so that one's still risk defined because you're buying the longer term 157.5s, but you need a bigger pop in this particular move, right? Above
It's
that.
still about that short strike. You're still aiming for this one is the 160 short strike.
But even if I don't get, Peter Brady there, even if I don't get all the way up to 160, if I get this move even to the expected range of 157, this thing's still going to do great.
Absolutely right. It's all, because diagonal calendar family, it's all about the short strike.
See, like you guys, I like your thoughts here because you guys are taking extreme bullish type of strategies, right? You need the stock to go up after earnings. I was more along the lines of if I'm neutral to bullish on something like this with elevated volatility, I'm probably selling put spreads. Selling the 139 strike in the weekly series and buying the 137s, either 9 days or 2 days out. Maybe selling the 139s, buying the 137, just just a $2
56
$2
cents
line.
on a $2 spread.
But that gives me that cushion to the downside. Even if it does fall, I still profit. But my profitability is probably not as high as it would be on a percentage basis.
Yeah, just remember,
with your
in that
strategy.
case, all you're going to make is the credit that you take in.
Yep.
Can I throw out one other idea here?
Yeah.
And this
Yes,
is something we
real
actually
quick.
did in Apple yesterday. We could sell an iron condor here. Sell a closer to at the money put spread in Facebook. So maybe sell the 140, 138, something like that. And then sell the 157 half, 162 half, or 155, 160 call spread.
Yep.
So you're going to skew that to the upside a little bit, take in a lot of premium.
Right.
What were your
idea.
calls?
157.
Maybe the
60.
157 half, 162 half. So that's going to give me protection all the way up to almost 160.
Yep.
And then sell like the 140, 138 put spread.
Yep.
Somewhere thereabouts.
Help, and you're taking, that's a neutral to bullish type stance, but you're skewing that to the upside a little bit.
Exactly, and taking in a nice healthy credit
Yeah.
right now.
And can you see what Scott did there? He's got a little, there you go.
It's a great way to look at it, and you limit your downside if it does, if there's something that comes out that's unwarranted on the downside.
Yeah.
But you still have that over $10 to the upside of that break-even point. All right, guys, that does it for this segment. A lot to go over there today. Scott's going to join us later on the show, but coming up next is Face Off. Ben Watson's going to take a look at Tesla ahead of their earnings. Stay right here on the TD Ameritrade Network. Fast Market will be right back.